CrowdStrike is down nearly 30% in the past 5 days after this crazy outage continues to impact many businesses. So on today's episode, I want to take a closer look at what the market is fearing, why the stock is down 30%. I want to share my overall thoughts and just take a closer look at everything else about the business. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so I mentioned CrowdStrike right now is down 12% on the day. We're going to take a closer look that we did see a nice of analysts downgrade the stock today on Monday. In the past 5 days, the stock is down nearly 30%, and year to date, the stock is only up 8%, after at one point, I do believe the stock was up over 50-60%, right? So there has been a huge sentiment shift here with CrowdStrike. And one of the biggest things in the overall market, not just in cybersecurity and software, but it's just the uncertainty of what's next. And right now, there is a lot of uncertainty with the issues that have arisen in the past few days, right? Some of the issues that are like, hey, look, a lot of money is being lost because of these outages. We can see an article here, cost from global outage could top $1 billion, but who pays the bill? And that's one of the fears right now. Is CrowdStrike going to have a huge amount of losses due to maybe lawsuits or stuff like that? Obviously, companies like this do have protections in their contracts for maybe something like this. But here in the United States, you all know how we can pretty much sue for anything. So that's one of the big uncertainty. Who's going to pay all this money? Is CrowdStrike going to lose a nice amount of cash in the upcoming quarters? What's the deal? The second kind of uncertainty is, hey, is this going to ruin the reputation for CrowdStrike? Is this going to allow maybe new members to maybe hesitate in entering in CrowdStrike, right? So there's a future reduction of future annual recurring revenue. Or the second thing, are current customers going to be so angry that they're going to end up leaving? Right, CrowdStrike is this ultimate toolbox for cybersecurity. So I want to say the latter might be a little bit more difficult than the first one, right? It might be a lot easier for new customers to be like, hey, look, maybe we should rethink it and look at other competitors. But those that are already in the ecosystem might say, hey, look, while this does suck, it might suck even more if we shift right now. So obviously that is an uncertainty and something that's most likely going to be discussed in the upcoming quarter's earnings, as we're going to hear a lot about these fears that, hey, look, is CrowdStrike gonna lose a lot of customers? And obviously with the company priced to near perfection, we can see the stock is sitting at $74 billion market cap, and it only has annual recurring revenue of its most recent earnings of around $3.6 billion. So right now, I believe that would put it at about 2 out of 20 annual recurring to price to annual recurring ratio right now, which is definitely pretty high. So now with all these uncertainties, we have seen a huge amount of price target decreases here for CrowdStrike. We can see Wells Fargo decreased their price target to 350 from 435. Piper Sandler 310 from $400. Morgan Stanley 396 from 422, RBC 380 from 420, and the list goes on and on. Scotiabank 300 from 393, President Capital 320 from 420, and like I mentioned, the list goes on and on because a lot of these uncertainties that I mentioned. So obviously when you start to see all these negative sentiments from analysts, you start to see a decrease in the stock price, just like we see right now. We can see the stock right now is down roughly 12%. So I mean, I want to say there might be some bullish sentiment here if you are a long-term investor, and if you believe those uncertainties are something that you don't really care about, that you think CrowdStrike is gonna, hey, while they might lose something in the short term of things, in the long term of things, this company is still doing pretty good. And I believe that's the case, right? I believe that the stock will be very volatile, at least for the next two earnings call, because of all these uncertainties. If CrowdStrike, for example, does not beat or does not meet expectations in annual recurring revenue growth this upcoming quarter, or if they see maybe a decrease in net retention, all the analysts are going to say, hey, look, this is happening because of the outage. And that's going to continue to drive stock price down. So in my opinion, within the next 2 quarters, any little bad news is going to come back to the outage and is going to cause maybe some negative sentiment to the stock. In the long term of things, though, I am still very bullish in this company, and let me explain why.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
So you might be saying, Jose, you are someone who follows the semiconductor market. Why are you talking about Crowdstrike? Well, Crowdstrike, I pretty much follow mainly the tech market in general. Obviously, because of my education, because of my career, I do focus in the semiconductor space, but I do follow other avenues as well. For example, here we can see in my top 3 AI stocks to look at for 2024, Crowdstrike made the list at 247, and that's one I released in January 6th of 2024. Not only that, when I really ended up building up my position on Crowdstrike was on October 2023. We can see October 3rd of 2023. And unfortunately, videos like this do very popular. This was one of my top growth stocks to buy now when the stock was sitting at $161. But this was pretty much when the company really did their Falcon conference and where they showcased a lot of great things for the company. And this is one thing that I'm still very excited about. They do mention that, hey, look, right now the company is sitting at roughly $3 billion in annual recurring revenue. Within the next 5 to 7 years, they believe that this can grow to $10 billion annual recurring revenue. And that's because of all the new solutions that they're adding, all the new modules that they're adding, and the increase of their customers increasing into more modules as well. So I don't see this as an impossible goal. Maybe in the short term, it might look at it because of some of the headwinds that are caused by the overall sentiment right now. But in the long term, I do believe 10 billion in ending annual recurring revenue is very possible for Crowdstrike. I mean, if we take a closer look at the most recent quarter, it had 3.65 billion, up 33% year over year. So we are in the long term going to continue to go in that uptrend. And now if we take a closer look at the valuation of Crowdstrike, right, at a $3.65 billion of annual recurring revenue, the company at a market cap of roughly let's just say 75 billion. So if you do 75 billion divided by that 3.65 in annual recurring revenue gives you a price to annual recurring revenue ratio of roughly 20. So now let's say that, hey, look, that's actually pretty expensive. Let's decrease that by 30%, right? So by 30%, that would actually give you an annual price to annual recurring revenue ratio of roughly 14. Now, if we take a closer look at in 5 to 7 years, this company is expected to do 10 billion in annual recurring revenue. That gives you a market cap of $143 billion. That's nearly 2x where the stock is at right now within the next 5 to 7 years. So for me, Crowdstrike right now is maybe not sitting at a super attractive levels where I would load up the truck. But based on what I'm seeing and based on my previous thoughts, I do believe this is a nice dollar cost averaging opportunity for Crowdstrike. But like I mentioned earlier on in this episode, this is one of those stocks that you have to be prepared within the next 2 quarters, the next 2 earnings, that any small mistake that they might make, any small missed expectations that they might see will create a lot of negative feedback, as everybody's going to point out and say, hey, look, thanks to the outage, this company missed on annual recurring revenue expectations, missed on growth in customers, and for that reason, this stock is going to continue to go down. So if you are an investor, I want to say be prepared for at least the next 2 quarters because things can get a little bit crazy. And because of that volatility, I continue to say that for me, this is more of a nice dollar cost average. It's not a time to kind of load up the boat. It is possible that the stock can go even lower and lower. So let me know your overall thoughts. Take care, have a good day, and see you all next time.